This is the Forexx Report.
Well, the markets today reacted to a confluence of factors, including President Trump's tariff announcements, key economic data releases, and notable earnings reports, particularly from the tech sector. We'll start by unpacking the latest economic data. The U.S. economy is sending us mixed signals right now. On one hand, GDP grew at an expected rate of 2.3% last quarter. However, initial jobless claims for the week ending February 22nd surged to a three-month high, reaching 242,000. This unexpected rise in unemployment claims, well above economists' forecasts of 221,000, suggests a potential softening in the labor market.
How might these tariffs affect the average American consumer? Will this lead to increased costs for goods and services?
That's a crucial question, and the answer isn't so straightforward. The impact of tariffs on the average American consumer is complex and depends on various factors. It's possible that prices for some goods imported from the affected countries, like Mexico, Canada, and China, could rise. We could see this in anything from automobiles to electronics to groceries. However, the actual impact on consumer prices will depend on how businesses respond to the tariffs. Some businesses might choose to absorb the increased costs from tariffs, while others might pass those costs on to consumers in the form of higher prices. The extent to which consumers feel the pinch will also depend on the specific goods and services affected by the tariffs. For example, if tariffs primarily target industrial components, the impact on everyday consumer goods might be less noticeable. Adding to the market uncertainty was President Trump's series of tariff announcements. He confirmed that tariffs on Mexico and Canada, initially announced earlier, will indeed proceed as planned, taking effect on March 4th. These tariffs, targeting steel and aluminum imports, have been a source of tension with our North American trade partners and could potentially impact the prices of goods for American consumers. Additionally, President Trump revealed plans to impose a new 10% tariff on $200 billion worth of Chinese goods, escalating the ongoing trade tensions between the two economic giants. This move is widely seen as a response to what the administration perceives as unfair trade practices by China.
How are retail traders reacting to this news, particularly the volatility in tech stocks like Nvidia? What advice would you give them?
Retail traders are likely reacting to this news with a mix of caution and opportunity seeking. The volatility in tech stocks, particularly Nvidia, highlights the importance of diversification and not overreacting to short-term market movements. Remember, investing in individual stocks, especially in a sector as dynamic as technology, always carries inherent risks. One day's fluctuation doesn't necessarily dictate the long-term trajectory of a company. Investors should focus on long-term fundamentals and consider consulting with a financial advisor before making any investment decisions. Beyond the tariffs, market sentiment was also swayed by corporate earnings, particularly in the tech sector. Nvidia, a leading AI chip manufacturer, reported better than expected earnings for the fourth quarter. However, their stock price experienced some volatility, initially rising in pre-market trading before dropping as much as 6% during the day. This fluctuation seems to be driven by concerns over Nvidia's gross margin outlook for the first quarter, which came in lower than analysts' estimates. Essentially, Nvidia is signaling that their profit margins on each chip sold might shrink next quarter, which has spooked some investors. This brings us to another important economic indicator released today, the Personal Consumption Expenditures, PCE index. This is the Federal Reserve's preferred measure of inflation, and it gives us a sense of how much prices are rising for things that people typically buy, like food, clothing, and housing. Investors are eagerly anticipating the release of this data point on Friday, as it will provide further insights into the trajectory of inflation and its potential influence on the Federal Reserve's interest rate policies. You see, the Fed is tasked with keeping inflation in check, but they also want to promote economic growth. They do this by adjusting interest rates. If inflation is running too hot, they might raise interest rates to cool things down, but if they raise rates too much or too quickly, they risk stifling economic growth, so they need to find that sweet spot.
Speaking of the Federal Reserve, how do you think they will respond to this recent economic data, including the jump in jobless claims and President Trump's tariff announcements?
That's the million-dollar question right now, isn't it?
Yeah.
The Federal Reserve is in a delicate position. They need to balance their mandate of controlling inflation with the potential impact of their policies on economic growth and employment. The recent rise in jobless claims could signal a weakening labor market, which might give the Fed pause before implementing further interest rate hikes. However, the tariffs introduce another layer of complexity. Tariffs can contribute to inflationary pressures by increasing the cost of imported goods. The Fed will have to carefully weigh these competing forces as they make their decisions about monetary policy in the coming months. We'll be watching closely for any signals from the Fed about their future plans.
President Trump's tariff announcements have also affected currency markets. What have we seen there?
We've seen some significant currency movements in response to the tariff news. The U.S. dollar strengthened, which is a typical reaction to increased trade tensions. Investors often seek refuge in the U.S. dollar during times of global uncertainty. Think of it as a flight to safety. On the other hand, the Canadian dollar and the Mexican peso weakened against the U.S. dollar, directly reflecting the impact of the tariffs targeting those countries. The euro also experienced a decline, likely due to President Trump's announcement of potential tariffs on European Union goods. These currency fluctuations can have a ripple effect on businesses and consumers, affecting the cost of imports and exports and influencing investment decisions.
With so much happening in the global economy and markets, what are some key takeaways that our listeners should keep in mind?
I think the overarching takeaway is that we're in a period of heightened volatility and uncertainty. Geopolitical events, trade policies, economic data, and corporate earnings are all contributing to this dynamic market environment. For investors, this reinforces the importance of staying informed, remaining disciplined, and managing risk effectively. It's also essential to remember that market reactions can be swift and sometimes unpredictable. Don't make impulsive investment decisions based on short-term news headlines. Instead, focus on building a resilient portfolio that can weather market storms and achieve your long-term financial objectives. This is an evolving situation, and we'll continue to monitor these developments closely in the coming days and weeks. One thing to keep an eye on is how the trade tensions between the U.S. and China play out. A full-blown trade war would likely have negative consequences for both economies and could lead to further market volatility. Another key factor to watch is the Federal Reserve's response to the latest economic data. Will they continue to raise interest rates, or will they pause in light of the recent jump in jobless claims? These are just a few of the many questions that investors are grappling with right now.
In addition to Nvidia, several other companies made notable market moves today.
Yeah.
Moderna, a biotechnology company known for its mRNA vaccines, saw its stock price fall after reports that the U.S. Department of Health and Human Services, HHS, is reviewing a $590 million contract for bird flu vaccines awarded to the company.
Oh.
This review has raised concerns among investors about the potential profitability of Moderna's vaccine pipeline.
Interesting.
Conversely, Warner Bros. Discovery, a media and entertainment conglomerate, experienced a stock price surge following positive streaming results. This suggests that despite the competitive streaming landscape, companies like Warner Bros., Discovery, are still finding ways to attract and retain subscribers. This signals the ongoing strength and growth potential of the streaming entertainment market.
Right.
So much to consider and so many factors at play. Thank you for guiding us through this complex landscape.
My pleasure. Knowledge is power, especially in times like these.
Indeed. And to our listeners, stay informed, stay engaged, and as always, invest wisely. This has been the Forex Report.